Hi everyone and welcome to another video included in the Zenfinex educational series. My name is Connor and I'm the Senior Market Analyst at the company, providing to you daily videos on market analysis and educational content. For today's video, I'm going to be running through two price action strategies that I use in my day-to-day trading, and it's going to include order blocks and false breakouts. And what I'm going to do is I'm going to run through the theory behind them all first before moving on to the chart and showing you some examples that you can test yourself. Now, I'm not saying indicators like moving averages, RSI and Fibonacci's are worthless, because they aren't, but they are based off price action, and I prefer to use them as confirmation for my trades rather than letting them dictate my positions, if you see what I mean. So let's have a look at false breakouts first. So I'm going to keep it really simple because it really isn't that complicated. So they're defined when the market threatens to break a structure either to the upside or the downside, but the candle actually closes back inside the range and you get a wick below or above the high. Now, they often trap breakout traders, and institutional players actually use them to gather liquidity for a move in another direction, and they can be used on any time frame as well. Let's take a look at the chart and have a look at some examples. Okay, so let's take a look at the false breakouts and exactly what I mean by that from the theory that I just mentioned. Now, let's say we have a situation in the market like this. This is Euro USD, and as traders by now we should be able to spot that we can see the low of the market here, and I can mark that for you, the market structure low. And as support and resistance traders, you might see that the market is finding support at this level, this support zone. As breakout traders, we might be waiting for the market to break below this level. Now let's have a look and see what price actually does just quickly. Now you can see that at some stage, if I zoom right in, you can see, I can even move it up slightly, the market was actually at some point below that low. And some people who are aggressive breakout traders would have just literally sold on that, and I'll leave a market in there. They could have sold seeing that break of structure to the downside. Stop loss maybe just above, I'll take profit there, and you can see we was tagged out pretty much right away. Now, what you could do is you could take advantage of these false breakouts, and if you wanted to be aggressive on the other side, you could say this is actually a situation where the market is looking to reverse. The reason that the market is looking to reverse here is what the big players like to do is they know that if someone was to buy the market at this level, they know that most likely their stop losses are going to be sitting just below these lows here. So they know there's a pool of liquidity sitting below a pool of stop losses from buyers. So what the big players and institutional players, what they are said to do is they are said to deliberately run the market down below the market structure low or above the market structure high, gather enough liquidity to then move the market in the other direction. So if you wanted to trade from this close with your stop loss just below the wicked low now, not the market structure low, hoping that the liquidity grab or the stop loss run has already occurred, then let's take a look what happens now. You can see this market shooting up to the upside, and it keeps going. So clear evidence of potentially stop loss hunting, false breakouts, all that kind of stuff, all in one trade we have there. I'll just show you another example as well. Try and find one on a high this time, and you can see really we have it here already. If I replay the chart all the way back to something like this, you can see that we have a market which is generally moving to the upside. You can see this big expansive move to the upside, and you can see that, I think we can all see that the market structure high is up here at 1.96, and I'll mark that for you, market structure high. Now, we also know now that if someone wants to sell the market from here, where would your stop loss likely to be? Well, it's likely to be at the market structure high, because you think if the market goes above there, then it's going to continue to go up. And the same with any breakout traders, they're waiting for the market these candles to run above this market structure high, then looking for buyers straight away. And you can see what happens in this situation now. So let's wind that back a bit more, just to that candle. So we've had a situation where liquidity's been taken from this high. You can see that the market was threatening to break out quite clearly as well, and it's quite a big wick, yet the candles closed back inside. So what you might do as a trader who's trading false breakouts, you might have your stop loss just above the wick, and maybe your take profit down at the lows here, which is probably the most realistic take profit. And you can see the market run down and smash our take profit. Now, like any trading strategy, this isn't perfect, but it is a way that we can maybe see what the big players are doing in the market, because they're the ones that are really driving the price. I hope that's cleared up false breakouts for you guys. If you have any questions, then please drop any comments in on the comment section. But for now, we'll move straight on to order blocks. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Okay, so next we have order blocks, and this is a concept that really in the last few years has exploded onto the scene, thanks really to a YouTube trader called ICT. Now, to define them, they are supply and demand zones, and if you've explored order flow trading before, then you've probably heard about order blocks, but if you haven't, no worries, I can go through them in an easy way for you. Now, the best way to define them really is they're interpreted as institutional players leaving footprints in the market from where they previously entered. So let's say you see a big movement in the market that wasn't fundamental, i.e. wasn't from a news spike, then it can be evidence of big players leaving their footprints from where they entered, because their volume of buying or selling will be so large. Now, banks tend to split up their trades in manageable blocks, so it avoids causing too much inefficiency in the market. And although we can't really spot them before, we can act on their re-entry. Again, it can be used on any time frame. Many people have slightly different interpretations of how to find them, but I'm going to go through my way and a way that suits me, because as traders you need to have that independence and have that ability to look at things your own way and find ways that suit you, and this is just the way that suits me. You will probably see me study order blocks and put them on our charts for every single analysis video that I do. So for me, I'll define a bullish order block, so an order block I'd like to buy from, as the last piece of bearish pressure before the move to the upside. Now, vice versa for a bearish order block or an order block I'm going to sell from, and I will discredit anything that does not cause a break in structure. Now, let me show you exactly what I mean on the chart. Okay, so order blocks now. I'm going to go through a bullish order block example and a bearish order block example for you. And then you can go through and ask any questions on the comment section, or you can go and test this out for yourself. Now, let's have a look at a bullish order block first. And I absolutely love doing this with the US indices, the NAS 100, always on the up. Any dips really have been treated with high volume buying over the, well, since it began really. So let's take a look at this example, right? So you can see a situation where the market was at 1380 and the market run down, tested the lows really at around 12,800, but then run back up to the upside. And you can actually see that the market at this level created a new high. So as an order block trader, we want to see, as I said for bullish order blocks, the last piece of bearish pressure before the move to the upside that caused the break in structure. And you can see this is the daily time frame, and you can see these candles could be evidence of institutional players in the market because it's a really clean run up. And you can see that we had this break of structure here, and I'm just going to label this template BOS, which stands for break of structure, and you'll see me doing this a lot in our analysis videos. So you can see the market run down, broke structure. So where was that last piece of bearish pressure really before we had this clean run to the upside. Well, I'd label it something like this. And again, people have different interpretations of that. But this is where the high volume buying came in. You have a look at that candle there, which was really, really strong. So we can actually label this now as potentially an order block entry level, OB entry level, where we'd look to buy from. And then we'd like to test really our take profit levels to be at the new market structure high. And if you mark that trade on, with the stop loss right there and the take profit up there, it's something like a 4 or 5 hour trade, which is really nice risk reward. So let's play it out quickly to see what happens. You can see the market start to run down towards our order block level. Have a bit of patience in it, and look, you can see straight away that we've now been tagged in to this buy at this level here. It's now tested that order block level, that footprint that was left behind from that big player institutional buying. And now you can see the market run up and smash through our take profit level. I mean, I think it goes even further. It does, and maybe you want to hold some of your position and hold it even further as well. That's absolutely fine. And this is a daily order block as well. I'm on the daily chart, which basically, I think the daily order blocks are the most reliable. If you go down onto the 5 and 10, 15 minute charts, they are still valid, but they are a little less reliable as well. So here's a clean example of a bullish order block. So that last piece of bearish pressure before the move to the upside that caused the break in structure. Hope that makes sense. Now let's have a look at some bearish order block examples. So you can see that Euro GBP as a whole really is trending to the downside, and you can see that if we zoom right in on the market structure now, you can see that we're actually closed below this market structure low. So we can claim this as a break in structure. Now we want to know really where this break of structure came from. And you can see for a bearish order block, it will be the last piece of bullish pressure before the move to the downside that caused the break in structure. So I see that as something that looks a little bit like this. And you can mark that as your order block entry level, slightly larger stop loss. But still, if you wanted to target lows, you're still getting over the money that you tried staking. Oh. So let's see how this one plays out. You can see the market come through and actually within the space of 5 days actually run straight to our take profit after this huge wick into our order block level. And you may even want to move your take profit levels, because I didn't play the chart forward enough. This would actually have been the low that you would have targeted. And you can see that price just smashed right through it as well. So that's a clean example of a bearish order block. And really that's it for order blocks. That is as simple as it gets. I think the best thing for you to do now is to go off and test this on live chart scenario. Do some demo trading on it potentially and see if you can spot those order blocks and get your own interpretation of them as well. This is the way that I see them, the way that works for me. It may be different for others, but give it a try anyway. Other than that, guys, I'd like to thank you all for listening. I hope I've given you a clear guide into false breakouts or stop runs and order blocks. If you do have any questions, please drop any comments in on the comment section. As always, I'll always reply to every single comment on there. Please like and subscribe to our channel as well, and we'll continue to give out this great value to you guys. Thanks for all for listening, and take care.